Good morning, everyone, and welcome to our live daily market outlook. Today is Thursday, 23rd of August, 2012. It seems that things are starting to move, and there's some accelerations in the market, as I mentioned yesterday. As end of the summer comes, and the more important things, events and meetings are happening. The markets are gaining pace, and yesterday actually we witnessed a strong move after the quite unexpected reaction from Federal Reserves as the minutes of the latest U.S. Fed Reserves meeting surprised the markets by suggesting that Fed is willing to deliver more stimulus and fairly soon. And basically that helped to lift euro to 7 weeks high, as well as pushing dollar to the fresh lows, and of course the commodities benefited out of this. So we had quite a lot of action during the late hours of yesterday's trading. We're gonna go into details in our technical part. Basically, this is the highlight of the yesterday's movements in the markets, as Fed was as we mentioned in our yesterday's session. It was the top event for Wednesday, and proved to be, though some expectations were not that optimistic regarding the further stimulus and the quantitative easing tree. This is what we also mentioned yesterday, and scenarios in case of further printing of money that will be quite negative for the dollar, and proved to be the scenario for in this case, as Fed announced that they are willing and having in their plans to possibly act again, that pushed the dollar to its fresh lows. Also from today's calendar, Thursday is usually a busy day, and we have the full calendar today with a lot of important events due to be released. Started with Germany, that has already been released. The GDP for second quarter stayed unchanged as expected at 0.3%, at least showing no decline in the growth of the economy, while Swiss trade balance for July increased. The trade surplus increased to 2.92 billion Swiss francs, decreased to, increased from 2.25 billion in June, and versus the 2.1 billion decrease shown on the forecast. More important releases are coming from a series of PMIs from Europe as well as United States. We have French PMIs for August due at 2 minutes before 10 local Cyprus time, showing some improvements. Recall that French GDP was the only one that stayed unchanged in the latest release compared to the others that showed a further decrease in the economies of the main Eurozone countries. As forecast shows, 50.1 is for services one for August compared to 50 in July, and manufacturing PMI 43.8 compared to 43.4 in July. German's PMIs are due at 728 GMT for August again. Some improvement also in German shows 43.6 is forecast compared to 43 in July, and services PMI 50.2, slightly below the July's reading of 50.3. Eurozone's one is again expected for August to show slight improvement, 44.3 compared to 44, and 47.9 on services one, unchanged compared to July's. It's important to mention that all of them are staying below mark of 50. That divides the growth from contraction, and well below 50 shows that Eurozone economies, at least the big economies, are still struggling and are still in the down move. As current crisis, actually the one that lasts from 2008, with some pause seen in the past couple of years and now being reactivated in 2011, is still putting a significant pressure on the big Eurozone countries. From America's U.S. jobless claims weekly release are due at 12:30, and no significant change compared to the previous weeks. Disappointing 366,000 compared to much lower forecast. Today's consensus is 365. The U.S. job market is still suffering and still not showing any stronger signals of recovery. U.S. manufacturing PMI due at 1300. GMT is slightly more negative compared to the previous release of 51.4, 51.3 is today's consensus. At 1400 GMT, US new home sales for July are again showing a positive, at least forecast 362,000 units of new homes is forecasted to show to be sold in July compared to 350,000 in the month of June. At the same time, Eurozone consumer confidence for August is forecasted more negative, -22, slightly worse than the -21.5 release in month of July. And finally, US HPI for June 0.6% compared to 0.8 release of month of May. Data from New Zealand and Australia, are due at late hours of GMT and basically will be, according to our local time, released in the new day tomorrow. Not to spend more time, as said, quite busy calendar today, a lot of events and releases, and we expect some increased speed of the market action as acceleration basically started yesterday, and most likely further action will be seen today. Just if we take any base technicals or fundamentals or news also that we have today's Merkel-Hollande meeting that are expected to give some, to tell the Greek Prime Minister Samaras that they can give him little space on easing in terms of the country's bailout agreement. Recall the Samaras asked for another 2 years in order to fully implement the austerity plan. That seems that they are finding the common language at this point. As of course, further tightening with Greece might not give good results, as strong opposition still existing in Greece is strongly opposing actually the austerity plan, and basically asking for Greece to leave the monetary union and Eurozone as on its own, as the current austerity plan is too tough and too strict for Greece. Been there a couple of weeks ago and they faced the crisis. It really doesn't look good at all, and I can say personally that I understand these people, because it's quite difficult to live in such conditions. The French and German leaders are going to meet today to basically to fine-tune their joint message to Greece and Samaras, who is now in a charm offensive, seeking more time for Athens to meet its bailout commitments. This is what we just mentioned. And we're going to take a look now in the technicals and see the latest past 24-hour movements and the forecasts and expectations for today, Thursday, 23rd of August. We are starting with the euro, as it was one of the, basically most of the instruments were top performers yesterday. As seen, the single currency lift above the previous strong barriers 24 and 24.40, and yesterday's high at 124.86 has been cleared after a brief consolidation down to 124.30, with the break above 125 psychological resistance, and basically our initial target extending so far to 125.70. It's significant. This was the barrier seen as a quite strong one, and also due to quite overextended lower time frames. Studies expected to limit the latest rally in favor of some corrective action, but as we can see at the beginning of European session, the pair is still heading higher. 125.55 is 38.2% Fibonacci retracement of the larger down move from 133.84 down to 120.42, reinforced by descending 90 days daily 90 days moving average at 125.67 that pair is attempting now to break. above which opens way towards the next barrier and our next target, psychological and round figure resistance at 126.00. Above this, we have some important levels higher than this. 126.91 is the high of 29th of June, and then 127, another round figure resistance. Ahead of next quite significant barriers, 127.13, 50% retracement, and the tops of mid-June at 127, approximately 127.40, 50 zone. That will be seen as the main targets in case of a clear break above 126. Back to the lower time frames, as the conditions are still quite extended, and the sort of FOMC MACD bearish divergence has been seen in the early hours of in the late hours of Asian session and early hours of European session, were signaling some pause in the current rally and the corrective action. So far there is no signal. The markets are up again, and the indicators started to point higher despite being entrenched, being in the overbought territory. And the similar situation is in the 4-hour chart studies, where quite extended conditions still do not generate any reversal signal, with all indicators firmly pointing higher, and the pair now rallying through important barrier previously mentioned, 125.55, 125.67, looking for test of 126.00 as our next target. Immediate support is this consolidation floor at approximately 125.20, where is also ascending 20 days moving average on the hourly chart, with another significant previous high at 124.86 and 124.70, the 55 days exponential moving average. Between these we have the 125 as a round figure support, and any dips should face these levels as supports, along with the 38.2% retracement at 124.49 currently, as we still don't see any top. This is just provisional outlook. I would say the more risk, downside risk, would be seen on loss of 124.30 and 124.00. Yesterday's low, close to 50% retracement and round figure support. That will put short-term bulls aside in favor of some stronger recovery, correction. So far the outlook for euro remains quite bullish. Of course, we have to see the releases of the today's economic indicators that are related to euro, which are German and Eurozone, with the German trade balance, with German GDP being already quite supportive. Now focuses on the PMIs from Eurozone and Germany that are due to be released soon, and this will give us some more clues and more direction, whether further support or some corrective easing for the single currency. And the sterling also is heading higher, following yesterday's release of FOMC that accelerated gains after hitting yesterday's fresh high at 158.16. Fresh rally extended so far, gains through our next psychological target at 59.00, with 159.11 seen so far, with outlook on the lower time frames, 1 and 4 hour, being positive, but overextended conditions see potential for corrective easing, yet no firm signal, no action seen of the pair as it continues to head higher. More important things shown on the daily chart, where the pair is currently attacking 61.8% Fibonacci retracement of the larger 163 to 152.67 descent, as fresh face and fresh leg higher has been established on a break above 200 days moving average, and the previous medium term range tops at 157.60-70 zone, now opening way for a further recovery and the extension of the medium term uptrend from 152.67 1st of June low, with the 61.8% being retraced so far, and the outlook from technical point of view being quite positive and supportive. back to the lower time frames, set overbought conditions might see some corrective easing with immediate dynamic support at 158.65 20 days exponential moving average ahead of 158.16, 158.12, which is 55 days one, as well as 158.00 is around figure support, and the higher platform at 157.67. I would say that ideally dips, any stronger dips, to be contained at or above 158.00 in order to keep the short-term bulls fully in play and open way for further extension higher, with the 160 as significant and psychological barrier seen in the near-term outlook as the next target for the sterling. At this point, loss of 157.70 higher platform would bring more risk and turn more focus towards the downside, as the easing below this might open a way towards 157 level, where is the bull trend line drawn of 154.89 currently standing, and this will dampen the short-term bulls, loss of which will dampen the short-term bulls. As the US dollar lost ground, the dollar yen's a brief correction after hitting 78.65 has nearly fully erased the latest rally from 78.15 to 79.65, as the pair dipped as low as 78.27. This was the low of yesterday, with the negative tone dominating on the lower time frame, seeing a potential for further easing. Although the overextended hourly conditions see some potential for stronger corrective action, so far we have seen the consolidation and correction up to 78.63, so around 40 pips consolidation, but further corrective action not ruled out at this point, as indicators started slowly to point higher off with their extremely extended overbought positions, looking for a test of initial dynamic barrier, descending 20 days exponential moving average, currently at 78.70, ahead of 78.80, 38.2% retracement of the latest down move. At this point, I would say quite strong barrier. It's at 79.00, around figure resistance, reinforced by 50% retracement, and descending 55 days moving average that currently stands exactly at 79.00, and ideally this should cap the reversal in favor of leaving a lower top and a fresh extension lower, as the outlook in the short term remains negative following yesterday's acceleration of losses and completely losing ground after a strong rally from 78.15, peaked at 79.65. Daily structure is also losing traction, as loss of momentum is now testing a broken bear trend line of the pair's yearly high at 84.17 through 80.61 peak of 25th of June, with brief break already seen, and firm break below this again to turn focus towards strong support and base at 78 zone, ahead of the key medium-term support at 77.65, a low of 1st of June 2012. And from majors, finally, the Swiss franc, that is also under heavy pressure, completely lost ground after losing, we mentioned yesterday, 96.54 was the latest low, double bottom of 6th and 7th of August 2012, as corrective action failed at 98 zone, and subsequent losses accelerated on loss of first of 97.00 and then the 96.55, with the 95.52 seen so far. Brief break below 90 days moving average on the daily chart that we mentioned yesterday as our next downside target, and the negative tone dominating now on the larger time frames, in this case daily chart, seeing potential for further extension and test of another important levels, 94.61 low of 29th of June, and the higher base and double bottom at 94.20, lows of 18 and 20th of June 2012, and 12 seen as the next short-term targets. On the lower time frames, quite extended conditions seen on 1 and 4 hour chart. See potential for some corrective easing, yet no any reversal signal being generated except the MACD bullish divergence seen on the hourly chart, where which could be signal for some corrective action. Dynamic support immediate 195.89 20 days exponential moving average, 96.00 as round figure support, and a near-term higher platform at 96.17 are seen as the next target. This is also the 55 days exponential moving average, and another static one at 96.58. At this point, if we take a look at the latest down leg from 98.08, initial Fibonacci is at around 96 zone, 23.6, and more significant is basically at 96 50 60 zone, where we have 38.2% retracement, and the previous lower top of yesterday, and basically any move higher that will stay below 97 in this case would be seen just as corrective. 96, I would say 96.50 at this point would be seen as corrective, and would risk a lower top ahead of fresh extension lower. As mentioned earlier, short-term targets remain downside at on break below 95 as round figure support at 94.61 and 94.20. And commodities that appreciated again following yesterday's positive news from Federal Reserves, as the crude oil continues to head higher. This is what I mentioned yesterday. The upside remains favored, and basically this scenario happened as also the disappointing data released from yesterday's crude inventories compared to the 1 to 400,000 barrels draw in the U.S. Crude stocks forecasted. It came, if I remember well, something minus 5.4 million barrels. That was another good support for the oil price, that was pushed so far to 98.26. This is the high of the day, with the firm break and close above 200 days moving average being quite supportive, along with the standard news that are coming from Middle East and Gulf region. Current tensions are giving great support to the oil price, as well as disruption in the supply from the North Sea due to technical problems and maintenance, pushing as well as U.S. sweet crude oil, also the Brent to their record recent highs, with the now break above 200 days moving average, and there is nothing significant left until $100 that we mentioned yesterday as our next target, and a very strong and psychological barrier. Recall that OPEC officials said that the most suitable and a good price for OPEC will be between $100 and $120, and it seems that this scenario is going to happen as the price is heading towards these levels. We hope it's not going to reach levels of the beginning of the year when it hit $110. This is quite uncomfortable for all of us who are using, I mean, everyone is using oil as for cars or for heating or everything, but in this case quite bad outlook for the consumers continues, and most likely the short-term scenario will be hitting $100 per barrel level in the short term. Immediate support yesterday's high at 97.82, seen ahead of 96 low of yesterday. That is so far that was contained. The dips were contained by the ascending 20 days exponential moving average, with the a more significant 95, 50, 100, 23.6% Fibonacci retracement low of 20th of August at 95.30, and the ascending 55 days exponential moving average at 95.37, giving quite a good support 95.50.40, and also the important one is around 94.70 previous highs. With, I would say, loss of only loss of 94.00 would be more would be trigger for more weakening of the oil price, but so far the outlook is quite positive and supportive. Quite stretched conditions, but yet not in overbought area, and yet no any signal of corrective action, seeing the upside firmly in focus in the near term. And finally, we're going to take a look at yellow metal. I think these are the most popular instruments, quite a strong rally as the gold hits its fresh 3 months high on its yesterday's acceleration after Fed's release, breaking above 1644 yesterday's previous low, and more significant is loss of break above 1640 recent range top that now opens way, as well as 200 days moving average at 1644 now opens way towards another significant upside barriers. The 1666 seen so far, this is the high of the day, reached this morning on a break above 50% retracement at 1658, and the next target seen at 1671, high of 1st of May 2012, 1679 high of pardon I do apologize, at 12th of April 2012, and 1689 61.8% retracement, positive tone on the daily chart, although the RSI is now entering overbought territory. That might be signal for some corrective action, as hourly studies are already well overbought and stretched towards the upside, with immediate dynamic support 1654, ascending 20 days moving average, and the 1650 seen as initial one, ahead of 55 days exponential moving average 1642, and the higher low at 1633. This is basically the top of the previous range, and ideally these levels should contain any stronger dips on the corrective action that is seen likely on the quite extended near-term conditions. That was all for today, Thursday, 23rd of August 2012. From my side, and now it's your time for questions and answers. Please submit your questions now. It seems that no questions today. We exhausted all important questions and points. So in this case, I would like to thank you all for being with us and attending our live sessions. Invitation for tomorrow's one, which is going to be the last of the week, and most likely we are going to see some good actions in the market today and tomorrow. Reminder, session starts at standard time 7:00 GMT or 10 o'clock local Cyprus time. Until then, I wish you a nice day and very successful and profitable trading. Good luck.